The first question is, what causes demand and makes it to put prices higher? This is quite a simple one. As we all know, when there is demand, price rises because there is demand, right? But if there are no winning buyers at those higher prices, demand won't do shit. Events can bring volatility to the market. News can bring volatility to the market. We can have a bullish news, whereas people are willing, they see that this asset or this coin is going to rise. But then, because of that news, sellers won't be willing to sell at lower prices. They will be willing to increase their prices so that they will make more gains. But if no buyer is willing to buy at those increased prices, there won't be price increment. The price will remain where it is. So the answer to this will be willingness of buyers to buy at those increased prices or whatever prices the market is selling for. Likewise for this, it's an inverse of that. What causes supply and makes it to push price lower? Price goes lower because of willingness of sellers to sell at lower prices. Now, your answer may not be exactly the same as I have said, but we will go through your answers and see the similarities between them. Then we will grade them. So that is that. Then the question 2. This is quite simple. The difference between the following candlesticks price line: open, close, high and low. We all know that the open of a candlestick is the starting price, where the price starts or where the trade starts for that particular period. And the close is where both the sellers and the buyers were able to agree on the price, or the closing where the price ends for that particular period. Whereas the high is the highest price reached and the low is the lowest price reached. So that is quite simple. Then the question 3. I have 10,000 ADA that I want to sell, but the quantity on the next bid, as I can see, is 2,000 ADA. So I decided to use a market sell. How will my orders be completely filled? We all know when you use a market order, maybe the order book is quite tiny, and you have a large pocket, or you have a large order that you want to either buy or sell. So you choose to market sell. What will happen is your orders will eat through all the buy side liquidity, which is the bids. It will start from the 2,000. The 2,000 will fill at that current price. Then once that is done, your orders, you still have like 8,000 left. It will proceed to the next one in line. It will eat that. If you still have more orders left to sell, it will keep filling until you are completely filled. So the answer to this is the market will set to you at any price available until your order is completely filled. You may not have that exact same answer, but if your answer is related, then you still get a pass. Then the 3B. I have identified this point of resistance and the price trading below it, as in the image below. Nonetheless, I am anticipating a break above, so I want to place my entry at the yellow line. That is this very yellow line here. That is where my entry will be. So when the breaks happen, let me quickly do this. So when the break happens, like we have a break above like this, my order will be filled and rally alongside. What other type will I use? This is quite simple. The other type I will use in placing a buy order above market prices is a stop limit. A stop limit order. That is the other type that I will use. Then the question 4A. I am completely filled on my spot BTC buy. You should notice that spot at 40,000 price. I want to place a stop loss at 35,000 and place a take profit at 50,000. What other type will I use in placing this? This is quite easy as well. I have 2 operations that I want to perform with just one order. That is a stop loss order and a take profit order. So the other type to use for this will be an one cancel the order. That is OCO. That is the answer for that. Then 4B. A salesman instigated the media house to propagate a rumor that his goods were going to be scarce, thereby creating artificial demand for his items, while he was able to increase prices and make extra gains. At a certain point of price increase, he noticed that the buyers' turnout were becoming low. What action would it take to continue high turnout sales? That is the first one in B. What action will it take? This is a volume price analysis. This is in a video of that volume price analysis where I said a market tumor. It was word for word for that example. I just changed from being a market tumor to a sales man. So when you have demand coming in at an increased prices, you are increasing your prices from point price A to B to C, and then demand keeps coming, as in the volume keep increasing. When you increase to a point D and you notice that the volume has dropped, that means nobody is interested to buy at those price line. That price line where nobody is interested to buy is either we say it's at the point of resistance, that's technically. But looking at the context of this, one way we say is nobody is interested in buying because the prices were high. So what action would the seller take to increase once again in turnout or increase the volume of buys? Number one, I mentioned that if you go to a mall and you want to buy maybe some clothes or some other items, and you see them placing 50% discount on this item, 30% discount on this item, it is because nobody is buying them and they want to sell. They want to bring back their buyers. They want to increase the buying volume. So they give a discount. But if not a discount, you expect the seller to reduce his price. It may not logically or strategically reduce the price from, maybe if he's selling for 1,000, he may not just say, okay, start selling for 800. He will say, okay, maybe 30% discount on this. But we know he is reducing the prices so he can offload the items. So here, I expect you to say he will reduce the prices of the item for him to increase the turnout sales. If your answer is not exactly like that, but related, you may still get a pass. That will depend on my panel of judges. Then the second one, what made buyers turnout become so low? Because price got so expensive, price became so high, and it is inorganic, so nobody was willing to buy at those expensive prices. So the answer is just prices got high or expensive. Then the question 5A, what is the difference between a scalper, a day trader, swing trader, and position trader? We all know this. A scalper is somebody that trades on a very low time frame for a little profit. They make more trades in a very short period of time. They can take as many trades as possible in as much as it happens on a very low time frame, so they can be able to open many positions within a very short time period. So a scalper is somebody who trades to accumulate profits, little profits on lower time frames. While day trader is somebody who trades within the day. He or she opens a position on the day and closes it on the day. They do not sleep over trades. That is a day trader. Then a swing trader is whoever trades within the week to months. They may open a position today and keep it for the next 1 or 2 months. If the trade is not going their way, they are ready to keep it. And position trader is basically an investor or somebody who buys and holds for a very long period of time. Then the last one, price has just broken the point of resistance as in the image below. I am interested in buying but not running after prices, which means you are not chasing price. Rather, I choose to wait for price to come back to my point of interest, fill my order, and then continue the rally. What type of trading or trader am I? So if you look at this image, we have the resistance line. We can see 3 points of resistance here, then a breakthrough. So you are now waiting for prices to come back to this, waiting for entry here. For you to wait for price at this resistance, you are expecting it to turn to support, right? But that is not the point here. Being a point of resistance turning to support or support and resistance, that is not the point here. The point is the fact that you are waiting. So for you to be waiting, you are waiting for something. And what is that you are waiting for? You are waiting for a retracement back to this level where you are willing to buy and then expect the rally. So the answer here will be retracement trading or retracement trader. So I will go over to the Telegram now and then I will inspect everybody that has sent me an answer. We will see whatever they have said and how best we can grade them. Great Ma, Dr. Dewumi, I hope Famo is there. I hope you guys are there, ready to judge our people. Okay. So here we have King Boma. So I hope you can see the Telegram this thing correctly, Sha. I don't know if it's clear enough to you guys. You can read the answers, right? Okay. So Boma said the question one, he said, asset has been oversold and price are now low and instigate more active buyers. Asset has been overbought. That is the second one. Asset has been overbought and price is now high and encourage more of active sellers. Let's look at that question one again. What causes demand and makes it to put prices higher? Asset has been oversold and price are now low and instigate more active buyers. How do you see this? It doesn't, right? Okay, that means the second one too won't answer the question. Yes.
Find out the psychology of the market as regards demand and supply.
Yes.
You understand where people are willing to buy a particular asset at a particular price.
Yes.
Where the willingness of people to buy an asset at a particular price that creates demand around that area.
Exactly.
Exactly. So it's not that's not the two between overbought or oversold.
Okay. So for the question one, he has 0 point, right? So let's move on to the question two. So the question two, the question is, okay, difference between the open to low. Then here, difference between price line on open, close, high and low. Candlestick represent price for a period of time. IM1, H4, 1D. Open is where the price starts from in that period, in a particular time frame represented by a candle body. Open is where price starts from, okay? Close is where price ends for that period, okay? High is the highest negotiation buying selling period represented by a thin line as shadow or week, okay? Low is the lowest, okay? So how do you see that? Okay, so that's 1 full point. Here where we have 4 questions or 4 explanation, each one will be 0.25. So 0.25, 0.25, 0.25, 0.25, that's 1 point. So the third question here, what is the third question here again? Okay, I have ADR, how will my orders be completely filled? The 10,000 ADA will be selling in bits according to demand until the 10,000 is complete. So is that correct? Okay, so the first one he has 0.5. I think 2 questions on that's 3A, right? Okay, then the 3B, I have identified points of, okay, this one I said is top limit. So let me see his answer. So he said buy, go long at entry order. Oh, okay. Okay. At all. So he has 0.5 from number 3. So number 4, I am completely filled on my spot. Okay, what other type? I think this is OCO. Number 4 is OCO. So number 4A, he said buy go long at entry level. I don't think that's correct. So that one missed road. Then the second one. Okay, this one is, this A will be 0.5, while this B will be 0.25, 0.25. Okay, so the first 4B will be, what action will it take to continue? Okay, I turn out. That is reducing prices, right? Okay, reduce price. So that's correct. That's 0.25 there. Then the second one, too much increase in price. Can we say too much increase in price means expensive or high? The question is, what made buyers turnout become so low? Which prices became, I mean, turnout became so low because the prices got expensive or so high for them to buy. So if that is it the same as too much increase in price? Okay. So that's 0.5 there. Yeah, yeah. Then the number five. The number five was the last question. The number five. Difference between a scalper. Okay. Then the B will be what type of trading? Let's do that one 0.5, 0.5. What do you think? Scalper trade and take profit at a very short period of time. Banking of slightest opportunity. MYFI, that's correct. Day traders start their trade and take profit loss within working day. That's also correct. Swing traders trade for a longer period of time, i.e. week months. That's correct. Okay. Position traders are investors. That's correct. So the first one has a 0.5, correct. Then the last 0.5, swing trading or swing trader. That is what type of trader? Retracement trader. He said swing trading. So that one has 0.5. So total of which should be 0.5, 0.5, 0.5. That is 1 to 2.5. Didn't mean the cutoff, right? The cutoff is 3. So we have maximum. Question 4A. OCO to place your order. Question 4A. What about order? Okay, that's correct. Let me do one. So you answer 4A. That's then the second one in the 4A was it? I mean the 4B says okay, that one is reduced price and high prices. That's 4B. It will spread the news to more buyers to increase sales. Is that correct? Then the buyer turnout later became low because buying had hit a resistance level. Is that correct? I think he sent another question, another answer. Let me see if I think he changed. No, he didn't change that. He didn't change that. He didn't change that. So the 4B is wrong. So he ends up with 0.5 in that number 4. Then question 3. What is the question 3 again? Question 3 is okay, the market order and the stop limit. So question 3A, buy using market sell, your order will be filled by very many people buying little bits of your idea till it's exhausted. This is right, but it's wrong. It's right, but it's wrong. Yes. They are not, I'm the one selling to them our market. So I'm not waiting for them to buy it till it's exhausted. Great is great man there. Oh, he has no voice. He has no voice. Wow. So what should we do with this? What should we give him? 0.25. Okay. That's 0.25 first. Then the second one. Then the 3B. Okay, that's top limit. You will use a limit by order, which will trigger when the price reaches a yellow line. Limit by won't trigger. But yes, I think he changed it. I think he changed. Let me see. This is number 2. No, number 2 now. He didn't change it. Oh, no. Limit by won't do that. Yes, it will still be correct. Yes. So it's wrong on that. So that means number 3 ends up with 0.25. Then which next one is the answer? That's 3. Then question 1. Okay, question 1 is willingness to buy and willingness to sell by sellers. He said scarcity, fundamental analysis, good use case, and popularity causes demand. Yeah, go and show mommy. Go and show mommy. So what are you saying about this? We know that scarcity can drive some demand. That is quite right. And fundamental analysis can also drive demand. Good use cases and popularity can also drive demand. We know. But if buyers are not willing to buy at those expensive prices, like we have Bitcoin now, Bitcoin is 60,000. 60,000 is quite expensive considering where it is coming from. But people are still willing to buy at 60,000. All these Elon Musk and institutional buyers. So it keeps driving up the demand, even where there is no scarcity, there is no or no new good use cases. Maybe there is a bit of popularity, but there is still the same fundamental since day one. But people are willing to buy, probably due to what we do not know. This answer is correct. It causes demand, but I don't know. What do you think? I'm not sure. I'm not sure.
Because if you look at the second one, supply,
Yeah,
the high number of sellers or ability causes supply of particular goods. More supply or availability to negotiate down price.
yeah. That is even correct than the first one.
Exactly than the first one. That was not
So what should we give him?
you can give him full mark
Full mark.
for one
Okay.
then maybe 0.25 for one. I hope I'm not saying too much.
Okay. Okay. That means 0.5 here, then 0.25 here. That's 0.75. Then the question 2. Oh, which one is next? I'm not sure how to answer about that. I say it means what those stuff means. Okay, so okay, you answered 5 first. Scalper buys and sell rapidly, hoping to make little profit. That's correct. Day trader trade. Day trader is a trader that looks at charts and makes different trades every day. Swing trader aims to make profits over a period of few days to several weeks. Okay, I think that's correct. Yeah, position trader is one that buys an asset, hoping that it will increase significantly in value over a long period of time. Okay, that's correct. That's full mark. That's
Consider day trader. He didn't indicate that open trade and closing trade.
yeah, that's true. But I think that's what it means by makes different trades every day. So I think that encompasses it. So that 5A, I think that's 0.5 first. Then the 5B. 5B is okay, retracement trader. I'm not sure he answered 5B. Okay, 5B. He said position trader. That's wrong. So 0.5 there. So which one is left? 2. Question number 2. Okay, this is it, I think. Open position means the exact price of an asset when a trade is opened within a very specific time frame. Close means exact price of an asset when a trade is closed within a very specific time frame. It can be higher or lower. Let me not read out plenty explanation so I don't find something. If open price is higher than close price, candlestick will be red. Okay, that's too much explanation. If open price is lower than, that's another too much explanation. A high position is the highest price of an asset range. Okay, low position is the lowest price, and I say okay, that's correct, I think. So that's one full mark. So now this will be total of 1, 2. I think this is 3. Am I correct? Then Who's next? Ashley. Okay, one. Demand. This work not easy. I'm telling you. So it's a demand causes higher or maybe goes higher because if more people are ready to buy a particular, that's correct. Let me not read too much. When the value of a particular asset or anything gets too high, then people might then people might wait for the price to get low and then buy rather than after the seller realizes that there are not enough buyers as compared to previous, so it will increase the supply and lower the prices. That's also correct. I think you understand that. Is the willingness to buy and willingness to sell by seller. So the first one I said demand, if people are ready to buy, that is also willingness. Then the second one, when value of an asset or anything gets too high, then people might wait for the price to get low. People waiting means people are not ready to buy at high prices. Yes. Then after that, seller realizes that there are not enough buyers as compared to previous. So it will increase the supply. Increasing the supply means lowering the price and lower the prices of an asset. That means he is willing to sell lower. So that's correct. Then the answer two. Open is that candle from where the price of the green or red candle starts. Okay. Close price where the window closes. That's correct. High is that wick of the candle where price gets to its maximum. That's correct. Okay, this one is correct. Is that all? Okay. So one mark there too. Then the question three. If you want to choose to go for the market sellers option, then that particular exchange will choose the best amount bid to fill your ADR sell request. Correct, right? Okay. Then let me see the second one. You will use the limit order in futures or OCO in spot. And if the price reaches your breakout level and you have opened an order for that crypto, then it will definitely fail. Let me see. Let me see the question 3B again. Okay, that is top limit. Question 3B is top limit. But here it says you will use limit order in futures or OCO. OCO will place two trades. So I think that's wrong. That's wrong. So here you have 0.5. Then 4. You will use limit order in futures or OCO. I believe you want to write OCO here in spot. That is question 4. Okay. Okay, so that's correct. That's 0.5 so far. Then the 4B is 0.25 each. What I shall that's reduce price and price so high. He said, I don't know. Okay, that's 0.5 for that. Then answer 5, scalper. Scalping is basically done two ways. First, when the market is going sideways, so the trader know where that crypto is, know when that crypto is high and lows. I'm not sure I'm understanding. And which level, so whenever that crypto is at bottom, above support, it will go long and close at the resistance, so it can go short at the resistance level. And close. No, this seems like level to level trading. So, yes. Day trader requires a lot of knowledge plus key. In day trading, you have to decide how much profit you have to take at the end of the day. So he enters the market with full TA and enters and closes whenever he is satisfied. I At the end of the day can mean many things. At the end of the day can mean many things. At the end of the day can mean many things. Hmm. But then look at this. He said, decide in day trading, you are when, let me see, close it, whenever he is satisfied with the desired level he reached at the end of the day. Okay, let's just give him this one 0.25, 0.25, 0.25, 0.25. So let me see how many questions. That's 5. Okay, this total one serve is 0.25. I don't know how to do this. Then swing trader. Swing trading also requires a lot of TA. In this, a trader, after doing his full TA, he will enter the market and wait until he reach his desired targets. And he will never put a stop loss. Wow. In his this is that's also wrong. Then okay. Then position trading. Say position trader is a person where a buyer enters in his favorite crypto and holds it till it reaches his desired level. This is mainly done in sports, maybe. I think some people do futures. I think this is a bit correct, this position trading, because of this word holds. So anytime he's satisfied. So that is also correct. So if you are to give him this and this for day trading, the mark for the first one is 0.5, the mark for the second one is 0.5. This one is a position trader. That's wrong. So he has lost this 0.5. Then if we are,
0.25 for each.
yeah, you know, this one is the 5A has 4 different lists. So it has to be 0.5 divided by 4. Let me see, 0.5. Let me see, 0.5 divided by 4. That's 0.125, and he has 2 correct. So he has 0.25. So 0.25 then. So the total then will be 1, 2, this is 3, 3.25. That's still a pass mark. Don't be so screwed though if you are here listening. Don't be so screwed though. It's a learning process. It's a learning process. We all started one day and at least you see you got 3.25. So you tried. Then we have Najin Requina. I don't know if I pronounce that name correctly. So Regine. Question 1. All right, no problem. So, all right. When the demand is high, the price go high. When the supply is high, the price go down. It's like inverse, but sometimes BTC price is overbought. That's why we can see correction sometimes that pulls down the BTC price. Can I answer like this? Yeah, sure. This one is when the demand is high. But what makes the demand to be high? That is the thing. That is the thing. What makes the demand to be high? When demand is high, definitely price will go high. But the thing, the basics behind, or the backbone of the demand being high, is the willingness of buyers to buy at whatever price the sellers is quoting. So this particular one, when demand is high, yes, demand drives the market. I even said it in the question. So for this, what do you think we should do, doctor?
So this doesn't fully answer the question.
No, I even stated that demand drives the market in the question. You understand? Like, see the question. We know demand causes price to move higher. I already said this myself. But the backbone, yes, the backbone now is what I need, which is the willingness of people to buy at higher prices. So this, let me just, that's 0, right? Then the question 2. Opening price within 24 hours sample. Closing price within 24 hours. Okay. Okay. Then this is the highest price. This is the lowest price. So that's correct. Then question 3. What is that question 3 again? Okay. Market selling then stop limit. A, answer, since you use a market order, your order will be instantly executed based on the available best buy. That's correct. That's correct. Then B, answer, I'm not really sure about this because I never used it, but maybe it's a limit order. Wait, let me see something. I think, okay, it's not limit. Okay, wait, stop limit. Is that, wait, let me see that question 3. Stop limit. No, she said stop limit in question 4, not 3. 3B is wrong. So 3 is 0.5. Then question 4. I'm so nervous. Don't be nervous. So it's not. I don't know if you understand. It's a simple life. It's simple life. Don't worry. It's a learning process. It's a learning process. Yes, there are more opportunities to come. Just try your best. That's all. So question 4. Stop limit order. What is that question 4 again? Question 4 is OCO. That's wrong. That's wrong. Then the second one. So, okay, that is 0.25, 0.25. Then it said the salesman must make the prices reasonable, not greedy. I think that's correct. Okay, yes. So 0.5 here. He lost the A. If not, could have been a full mark. Then the question 5. Scalping is like trading minute by minute. That one alone don't answer them is correct. It's a bit different on scalping because they usually buy or sell on a target price and the price difference is usually big. Swing trader, this is me. We buy or sell on a very big price difference. So this is so profitable, especially if you are doing in the long-term trades. This long-term trades, I think it answers this. But is it really long-term trade? It's mid-term. It's mid-term, not long-term, yes.
Long term. You also said long term, the position trader. So
But yeah, but the position trader, she's right. Orders of an asset. So that's that position trading is correct. So that one is 0.125 so far for that. Then this swing trader, this is me, we buy. All the things we should do here. The profit margin doesn't really matter. Yes, it's not about the profit margin. You can day trade and take 30%. We've been seeing huge spikes in crypto these past days. The same profit a day trader will make is the same profit a swing trader will make. You can hold your trade for 1 week. Price will rise by 90% or in just 1 day. And the next day, price will keep dropping back. Whereas a day trader will take the full profit on that 90%. So the profit margin doesn't matter. It is the time period that matters. So what should we do in this 5A? Scalping is also correct. So that one should be 0.25. Then the day trader, what should we do? It's not correct, right? What of the swing? It's not correct, eh?
but because he included, I don't know, that long term trade that included.
Swing is mid-term, not long-term. Scalping is the shortest time period ever. Then day trading is short-term, while swing trading is mid-term, and position is long-term. So if you are using long-term on swing trading, then that's wrong. So that's 0.25 there. Then the B, I can't really identify this one because I don't know the price gap. But my guess is swing trades because sometimes you may wait for a few days before it comes back to that price. It is not about the waiting time now. It is the fact that you are waiting. The question is this what type of trading I am? If there is a breakout, and instead of following price, instead of chasing price, you are choosing to wait for the retracement. So it's retracement trading. So it's not really swing. It doesn't matter if it takes 10 days or not. There are some trades I'm waiting for here. I'm a day trader, right? But there are some trades I've placed my buy signals on my entry order on for the past 2 weeks, and I'm still waiting. What happens is the moment prices comes back to fill me in, I'm going on the shortest time frame to see my next exit. So it doesn't matter how long I wait, but how long I stay in the trade. So this, and the answer to this is not swing trading, it's wrong. So there you end up with 0.25. So here we have 1, we have 2, 2.25. Reading me the cutoff. Reading me the cutoff. Only 2 people have spent the cutoff so far. Wow. So the next person, Ijoma, are you still there? Ijoma, are you still there? Why you don't sleep? So Ijoma is the next person. This typing not be small work. You are still there, okay. Now it's your turn, eh? Yeah. So you started with number 5A. A scalper is a person who open and close trades within a very short time period. That's correct. A day trader is someone that open and closes trade or position within the same day. That's correct. Swing trader opens until weeks or months. That's correct. Position trader is mainly okay, that's correct. So that number 5A, that's 0.5. Yeah, let's go to the 5B. Conservative trader. That is also correct. That is also correct. But I wasn't expecting. Yeah, it's correct. Being conservative means you are not chasing price. You are actually waiting. You understand? Because we have conservative and aggressive. So in the video I said breakout traders are aggressive traders, while retracement traders are conservative traders. So instead of the term retracement now, she has chosen to use conservative. So let's say that's correct. So that's 1 full point. Then number 2, open is the first price an asset is at the initial starting point. Okay. Close is the last price agreed upon. Okay. High is the highest. Then low, this is the price. Whoa. This is the, she missed something there. She missed something there. Okay. Now, wow. So that is 0.25, 0.25, 0.25. That one is wrong. 0.75. Then number 3. Using the market price, the 2000 order will first be filled and then it will move to the next available order. Perfect. Stop limit. That's correct. 3 full points. Then for a OCO, one cancel the other. That's 0.5 so far. Then the B, he has to reduce the price from the previous price it was. That's correct. Then buyer order became so low because there is lack of it. Oh, perfect. I clap for you for that one. I was expecting that lack of interest. That lack of interest, you know, when I was talking to you about that, I mentioned that lack of interest too. That is it. That is my own keyword. So that one is correct. 1 point, 1 full point. Then number 1, a rumor of a possible scarcity of an asset will cause demand to be high. Yes. And a possible price increase of that asset. Yes. But that didn't quite answer. Yes. You are right. All this will create demand. Yes. But the demand will push price high when people are willing to buy. Yes. If the buyers are willing to buy, when there is an excess supply of an asset and the lack of interest of buyers due to high prices, due to high price increase. When there is an excess supply of an asset and the lack of interest of buyers due to high price increase. She didn't quite complete it. Seller will sell low. That means the willingness to sell low. So this one, you are wrong. Next time you do better. So yeah, that's 3.75. Yeah, good evening. So How?
Main advisor, yeah, became an app that because I think that's scarce.
Yes. 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 Now let me explain. It's not straightforward. The question is not straightforward. It's an intentional question. Now look at the question once again. I said we know demand causes price to move higher. What am I saying there? I'm telling you that demand pushes the prices. Are you getting me? I'm telling you, I'm intentionally telling you that demand is what pushes the prices. We know demand causes price to move higher, and supply causes price to move lower. Therefore, supply and demand moves the market. Are you getting it? I have said demand and supply moves the market already. Now, if okay, let's look at this thing that happened in Nigeria this past day, where I read in the news that the northern people are refusing to bring few stuff down to the south. What happened? They created shortage in the market, in the southern market, right? That means they created demand, artificial demand, because there is scarcity. When there is scarcity, there will be demand, and then prices skyrocketed in for prices of onions and coal. They went very high. Whereas in the north, there became excess. There was excess supply. And what happened? What was selling for maybe 45,000 naira before started selling for like 5,000 naira. The price crashed in the north, whereas price increased in the south. That is supply and demand due to scarcity and excess supply. But now look at it in the south. When the prices of onions, maybe they are selling a basket for 10,000 naira before. Then because Hausa people refused to bring onions and coal to the south, the prices moved from 10,000 naira a basket to 30,000 naira a basket. If nobody was buying with the price increase, will there be any seller? If nobody bought at that increased prices, will there be any transaction? And are you getting the point? So it is the willingness of buyers to buy at that expensive prices that will push the prices higher, not the inflated, that is demand. Yes, there is demand. People are in demand of onions and food stuff, right? Now there is scarcity, which means people will be rushing to buy at that cheapest price before the price rises. But the moment the price increases from 10,000 to 20,000, if nobody buys at that 20,000, there won't be any transaction. So we will say there is no demand. See, or not, if nobody buys, there won't be any transaction. That means there is no demand. So the backbone of that demand is the willingness to buy and the willingness to sell. You say? Yes. Exactly. As not, okay, look at Dogecoin. Look at Dogecoin. When Elon Musk just tweeted about Dogecoin. Who wanted to trade Dogecoin before? But Elon Musk just just tweeted about Dogecoin, and it's wow, boom, just like that. And people were buying. I'm telling you. But if you look at the value, is Dogecoin really valuable? It's a meme coin, as people do say. But people still bought it, and some people made profit of it because they were willing to buy. If nobody was willing to buy, even despite Elon Musk's tweets, it wouldn't move in price at all. You get the point now? So that is why I said the scarcity. They are right. Yes, all those scarcity and stuff drives demand. But the backbone, go, 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 the backbone, that is what I wanted to know. You get it, eh? So that's it. But we can still review this, yeah? We can still review this. So let's move on for now. MD. Yeah, Ijoma, we finished 3.75. You see now that this webinar, whatever it's called, is even better. So people can express their views. Okay, it started with 5A. A scalper opens a closing of trading positions within the same day without keeping it to the next day. Day trading is the opening of, yeah, that the trade within minutes. Oh, okay. That's correct. That's correct. That's correct. Sorry, I apologize for that. As I saw with the next day, I just so day trading is the opening a position, opening and closing of trading positions within the same day. It doesn't leave it to the next day. Okay, that's correct. Swing trading and keeping trades between a day up to weeks. Okay, that's correct. Position trading, months or years. That's correct. So that 5 is 0.5 so far. Then resistance trading. The strategy I'm using is resistance and support, yes, but that is not the type of trader I am now because I am waiting for the trade. So that is not correct. It is either, as Ijoma said, conservative trading or retracement trading. So for A, what is that for again? For A, okay. OCO, that's correct. So 0.5. Then what is the second one in 4? Okay, so smart 0.25, 0.25. Where is your 4B? Okay. It is because the price was rising so rapidly and buyers have missed out or were not able to meet up. It could also be that the volume was not encouraging. The action you can take to get more turnout is not increase awareness or artificial value to the asset. I'm not sure I quite understand. I don't know if MD is here. MD, I don't know if you are here. Okay, so doctor, what should we? This one I don't. To me, it is because prices was rising so rapidly and buyers have missed out or were not able to meet up. It could also be. What's the question again, sir? 4B. No, the Iboma that increased his price. What action we need to continue to now? That's reduced price and high prices made it. So I can't really tell which one is. It's because prices are rising so rapidly. I don't know if this now is to the second one. But it says buyers have missed out or were not able to meet up. It could also be that the volume was not encouraging. The action it can take to get more turnout is not increase awareness or artificial value to the asset. If you say not increase artificial value to the asset, I will say that is correct. But when you say not increase awareness, yes, that's for the first question. But this one for the second question is wrong. So that this one, let's give him 0.25 Abi. So that question for will be 0.75. Then 3A. The order can be completely filled if a market sell order is placed. I don't understand though, because I already said I'm placing a market sell order.
No, it doesn't explain how the market order will be placed.
Yes.
Not correct.
Okay. So then 3B, I will set a limit order for the price I want so that when price breaks through, I'm filled in. Limit order won't place your order. It is a stop limit that will place the order. So that's a 0 for 3. Then question 2. Open is a starting or offering price of an asset. Okay. Close is the price that was later an acceptable price range. Okay. High is when the price has gone far above the open price. It's a long upward movement. Low is when the price has gone below the open price. Okay. Can we say that is also correct?
Yeah, but the case where, okay.
I think I understand what he's trying to say. This one is actually correct. This one is also correct. This high is when price has gone far above the open price. I think he's doing it like this because of that differences that I said. Yes, so it's still correct. Let's give him one. Then the question one, I can't see the question one. Okay. What causes demand and increase in prices when the asset or item has a positive news around it, and where the need to use such asset is needed? What causes supply and the price to move downward is when an item has been overbought and the need is not needed at that moment. A coin can remain overbought for 1 year and the price will never drop. So this is not correct. This is not correct. Wow. So here we have 1.5 plus, that's 2.25. But all these things are actually simple. Then the next person, Agbawo. Is Agbawo here? Agbawo. Agbawo is not here. Okay. I don't know how I can rotate this thing. Okay. So it says this is scarcity, right? Then surplus or excess. What is that question one again? Yes. It's not right based on our recent explanation. Then question two. What is that question two again? Okay. Differences between open and close. Open, it shows information of price at which an asset opens at a particular time. Okay. Shows the closing price. Okay. It shows the highest point at which price reaches. Okay. Low, it shows the negative change in price or the lowest price of an. Okay, that's correct. So that one is full point there. Then number three. What is that number three once again? That number three is okay, that market order and stop limit. Your order will be sold at market current price by filling the 2000 ADA first and taking the next 8000 ADA available okay on the other book, after which the average price of all the other will be used to calculate your sell price. Yeah. After which the average price in the average of all the sales. So that's correct. Then buy stop limit, that's also stop market, that's also correct. So that one is a full point too. Then number four. What is that number four again? Okay, OCO, then say smart. OCO, that's correct. If we need to reduce or lower the prices one, that's correct. Buyer turned became low because okay, that's correct. So that's one full point. Your eye good though. Then the last one. A scalper is a trader that open and close position or trade in a short period of time to make small profits. Okay. Day trader is trader that open and close trades within that very day without extending to the next day. That's correct. Swing trader opens and keep a position from between a day to about a month. That's correct. Even say, as you know, I believe you know position already, so no need to read. The position trader is a trader that buys and hold position. That's correct. 1, 2, 3. Wow. Seems to be the highest so far. All these are got with the notebook. Charming word. Agbawo. Yeah, it's question 5. Question 5. Oh, wait. I think there are 2 questions. So this one is 0.5 so far. Thank you. Number 5. Oh, he still get answer. Sorry for the mistake. I think he answered this one before. I said a beginner. I don't know if Agbawo is here. Agbawo no be beginner. I don't know beginner. Agbawo no be beginner. Yes, Agbawo no be beginner. Agbawo no be beginner. Charming word. Okay. What causes demand and makes price move higher is when there is scarcity, because of supply, the asset or commodity or a positive need. That's correct, but that's not the answer. What causes supply? What causes supply and makes the price? Hello. What causes supply and makes the price lower is when there is too much buy. That's very, very wrong. That's very, very wrong. So what do we do? Okay. After the whole marking, this marking can take time. Or people when they mark wide, then they try. That first one is 0. Then the question 2. Open price is the point at which an asset can be bought. Open price is a point. Asset can be bought at any price. Close is when the asset has moved past its entry point. What entry point? High is when the price has passed its resistance point. No. High, we can even say the high is the resistance. Low is when the price is below. Oh, no. Maybe. Question 3. I will set it to market in the trading tab. It will sell my order instantly at the current trading price. How do you see this?
Okay, because the question was how will the market sell order be placed?
Is it be placed or
Like how will the execute
yes? How will it be completely filled? But she said it will sell instantly at the current trading price. That is also correct. Yes. So we should give half price here or half mark. Okay, so that's 0.25 so far. Then 3B, I will use the limit option and set my sell order at the high price around the yellow line. So when the price move upward, it's not limit, it's stop limit. There is a difference between limit and stop limit. So the end result here is 0.25. 4B. 4B first. What is that 4B? Did you miss this or 4B? Maybe that's 4A because there is another 4B here. So that's 4A. OCO. That's correct. 0.5. Then the 4B. That's 0.25. 0.25. That's SISMA. 4B. The action it will take is to make a news or promise of a reward for buying or holding his assets. How do you see this? A promise like buy one get one free, something like that. You understand? I think that will also work because if you are selling, let me explain a bit. If you are selling one product or one item for 1,000 and now you are giving them a promise of a reward like buy one get one free, that means you are actually selling 2 for 1,000 now, which means the value of one is 500. That is also equals to reduction. But she's just saying it, he or she is saying it in another way and form. Okay, so let's say that 4B 0.25. Then the second one, buyers became so low because it was not an organic growth, and many buyers are not aware or it has passed their buying points. That's also correct. So this was 0.5 complete. So that 4, 1 point. Then 5B, retracement trader, that's a 0.5. Where is 5A? Wait, I'm coming. I think there is a correction to question 2 correction. Close is when price has come to an accepted point by the trader. Okay, I'll come back to this question too. Okay, 4A, answer please. Oh, okay, she even corrected it. 4A, answer please. I was typing fast, okay. Then I'm looking for 5A, right? Okay, a scalping trade within a very short period of time, usually within a day, usually within 1 minute time frame, up to 50. That's correct. Day trader open and closing of trade positions within the same day. Okay. Swing trader, I want to say something weeks to month, weekly time frame. Okay. Position trader known as a long time. That's correct. So this one is full point as well. Now let me go back to that question 2. Question 2 correction. Close is when price has come to an accepted point by the trader against the initial. Okay, by saying these accepted points, how do you see this? Yeah, yeah,
See, this question is straightforward. There's no need to try and reason down.
yes,
Open price, close price, high, low. Do you understand?
yeah,
It's full of technical analyzing or anything.
yeah,
That the open price is the price at which the asset opened at that
yes,
particular time.
yes.
So I don't know. I'm trying not to be strict, but at the same time,
So we shouldn't score her or him. She missed the other one, Susha. At which asset can be bought. Yes. Then close is when asset has moved. But here he or she changed the close to when accepted by. I think she's trying to say settled price. I think she's trying to say settlement price here. By saying accepted point, maybe that's the final agreed price that where the other stopped or where the transaction stopped. Maybe that's what she's trying to say here. I don't know. I don't know. What so should we give or should we not give? Okay. So okay, so that's that then. That's 2.25. Then the next person is Chrissy Estrada. Estrada, are you Spanish or Portuguese? Okay, question one, demand is cause of people buying specific asset that pushes the prices higher. So price caused by people that sells the asset that pushes the prices lower. How do you see this? So what should we do? A buying and selling. Okay. Okay, so let's give her. Next question two. Open means where the price starts, okay? Close me where the price ends, okay? High is the highest, low is the lowest. So that's another one. Next question three. Your order is completely filled at the exact time you click sell. Of course, it's completely filled by the exact time I click sell. But how? What happens? What? There something must have happened the moment I click that sell. Now wow. Then B, you should use the stop limit order. Let's give us 0.5 then. So question 4. OCO, you must make it as reasonable prices. The price is too expensive. That's question 4. Question 4 answer is not completed anyway. That OCO is correct. That's 0.5 there. Then the B, you must make it reasonable. He answered only one there. He answered only one. So he didn't answer the second one. So that becomes 0.75. The person gonna miss 0.25. Maybe due to pressure. Then question 5. Scalper is doing trades in short period of time, like in a minute. The trader which a trader buys and sells within the same trading day. Swing usually weeks to months. Position trader house. That's correct. Then retracement trader. That's perfect one. I like these fast answers. So the total point is 1, 2, 3, 3.5. That's 4 points. Let me use my calculator, I beg. Wait, let me do it again. 1 plus 1 plus 1 plus 0.5 plus 0.75. 4.25. Wow. Sure. Very nice. 4.25. God favor me. Amen. Oh. God favor. Well, I know spell your favor correct. Wow. So, okay. What causes demand and make it to push price higher? That means the buyers are still in control of the market. Is that another way of saying it? Okay. So, then sellers are still in control. So that's one. Then question 2. What is the difference between candlestick price line? Beginning. Open is beginning, yes. Close the top of the body representing the closing price. Okay. You get luck for putting this. If not, but this one is a gel at all. This high is a high price, low is a low price. I'll just give you. But I expect you to say highest and lowest. Yes. Then 3. Market execution is applicable while it filled my order with the next available price until my order is filled. Okay, that's correct. Breakout trading strategy is applicable. I didn't ask for the strategy. That's 3B. Yes, it's breakout trading. It's breakout trading, we know. But what other type? Other type. So you missed that one. So you got the first one and missed the second one. So that's 0.5. Then number 4. Stop limit order. Let me see. Oh, the first one said I have a stop limit. This other one, 4A, is OCO. 4A is OCO. Then, so that one is wrong. Then the second one, reduce price to encourage more sale. That's correct. There is abnormal increase in prices, which the buyer not willing to buy the item due to alternative in items or competitive offer relative lower weight. There is abnormal increase in price. Okay. That abnormal increase in price alone is just, let me say, or what do you think? That's 0.5 AB. Okay. So the last one. Okay. So scalping, he or she open and close position or trade within a very short period of time. Okay. The trader open close in the same day without trading. Yes. Swing trading, open position and keep trade between a day up to 2. That's correct. Position is small is up. Okay, that's correct. Retracement trading, that's also correct. So that's 1 point. This is now 1, 2, 3, 4. Wow. God love favor also. Lovett, are you still there? I don't know if Lovett is actually a doctor because your name I'm saying Dr. Lovett. Yeah, I'm telling you. My wife's name is actually Lovett as well.
Don't be biased.
I won't. So so the first one. So demand is caused by buying at that particular price, okay? It pushes price higher because people are willing to keep buying, right? Right. Supply is caused by selling, less are less willing to buy at that price. Therefore, yes, that's also correct. So that one is until it reaches price. Therefore, until price reaches a level where people are willing to buy, it keep going. Okay. Yeah. Open is the price at the start of the candle. Okay. Close is the last price when the price candle time closes. Okay. High is the highest price. Low is the lowest price. That's also correct. 3. This is 4A OCO. 4B, you have to reduce price. Buyers reduced because the price became too high. So that number 4 is also correct. That number 4 is also correct. Where is your number 3? Number 5. A scalper is a trader that trades over a short period of time and makes many trades in a day, right? A day trader opens and closes within the same day, right? Swing trader trades over a period of weeks to more, right? Position trader trades over months or years, right? Retracement, that's also correct. And I'm sure I say this money go reach you now today. Okay, let's see. Then okay, this is ending number 3. We'll go find out, so we go see. 3A. The first bid will fill 20% of your order, then subsequent bid will keep filling your order. That's correct. Stop limit order. Wow. 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 Make I clap again. Wow, wow. Okay, I think is that her? She's no longer a beginner. Agbawo, seriously, they are not beginner. Somebody sent after this year has closed 728. We can't accept that anymore. It's late already. It's late already. Make I also sorry too late. But let's see analyze. News majorly drives market up and down. We know. Opening is this is the price the market starts within the day. Close market reaches at the end of the day. Highest, lowest. 3. The 10,000 order will sell immediately. I think the exchange automatically will sell it automatically. You will use limit order. This is also wrong, sir. The other type is called OCO. No. 728, the first one. Oh, sorry. 728 my time. That's 8 that's 828 Nigeria. Okay, that is all, Abby. That is everybody that answered. Yeah, that is all the answers. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, 11. So let's count the winners. The moment of truth. So King Boomer had 2.5. Didn't make the cutoff. Maximum had 3. Made the cutoff. So how will I mark this one now? Make the cutoff. Then Ashley made the cutoff. That's 2. Negin didn't quite make the cutoff. Ijoma made the cutoff. That's 3. Then MD didn't make the cutoff. Where are we just stuck? Then Shamin Ward didn't make the cutoff. Estrada made the cutoff. God Favor Me made the cutoff. Then Dr. Lovett. Wow, this is not the moment of truth now. So wow. So now I said there will be priority. I said the person that scores the highest, we have the most priority. So we start from the highest person to the lowest now. So that is that she had 5 points. Then Estrada 4.2, Agbawo 4. Okay. So we had 2 4, I think. Agbawo is 4. Yeah, God Favor is 4. Agbawo is 4. Estrada is 4.25. So Estrada. Then we have God Favor and Agbawo. God Favor. Then who is the next person on the line? Ijoma is 3.75. Ashley is 3.25. Wow. Then that's Ijoma, Ashley, and Maximum. I don't know if this is correct. Mark. Ijoma, yes. Ashley 3.25 there. Maximum. That's 3. So 1, 2, 3, 4, 5. Wow. So Dr. Lovett, Estrada, God Favor, Agbawo, and Ijoma, you are our winners for today. But Ashley and Maximum, they also got the cutoff. What do you think should happen to them? Just to encourage them, Abby. Just to encourage them. I think that person is one of them. So what should we do for them? Okay. So Dr. Lovett, Estrada, God Favor, Agba Wejama, that's $100 each. That's $500. Then Ashley and Maximum, I think I'll give them $25 each. $25 each. So let me just write it here. Are you Maximum? Ah, yeah, welcome. You actually tried. I don't know if everybody that has won here. Yeah, congrats to everybody. You appreciate the answers to the questions, right? We actually okay. It seems you came late, so let's go over it again. Let's go over it again. So where is the question again? I feel remove my Telegram now from the screen. Okay, so the question is: we know demand causes price to move higher, and supply causes price to move lower. Therefore, demand and supply, or supply and demand, moves the market. What causes demand and makes it to push prices higher? Then, what causes supply and makes it to push price lower? If you look at this question one, it's very technical. Maybe not technical, but logical. I don't know how to say it. But then I'm asking for the backbone. What is the main cause that makes the price to go higher? And we Toba asked us a question recently during the live, and we explained to him using this current north and south wahala in Nigeria that the marketers of foodstuff, tomatoes, onions, and co, they refuse to bring items or foodstuff down to the south, thereby causing scarcity in the southern market. And because of that scarcity, prices of those things went up. So if a bag of onion was going for 10,000 naira before, because of the scarcity due to trucks not coming down, prices rose to maybe 20,000 or 30,000. Whereas in the north, they had excess supply due to the excess availability of those items, thereby causing excess supply and driving prices lower. I saw on the news that maybe a basket of something that was selling for 45,000 started selling for like 5,000 in the north, whereas something selling for 10,000 in the south went up to as much as 30 to 40,000. So there was demand, there was high inflation prices in the south, whereas there was excess in the north. So the demand now caused artificially in the south. If at that particular moment where the news came out that trucks are no longer coming, that means scarcity is eating the market. What will everybody do? People will go out wanting to buy. They will be rushing to buy those things. Everybody will want to buy, maybe it's selling for 10,000. Everybody will want to buy as much as they can within that 10,000 price range. But the moment scarcity eats them like bosa like this, prices will rise 20,000, 30,000 and above. If nobody is willing to buy at 20,000, there will be no transaction. And for there to be no transaction means there is no demand. So what causes demand and makes it to push prices higher is the willingness of people or willingness of buyers to buy at those higher prices. Then we made an example of Bitcoin. This time last year, Bitcoin was trading below $4,000. But right now, it's trading close to $60,000. So looking at that price variation, it is very expensive at this very point. Somebody who wanted to buy at 4,000 but couldn't, will the person be able to buy at 60,000 now? The person won't want to buy because he will believe the price is so expensive and he'll be waiting for it to at least retrace back 50% of that move before he can get it. So why are people still buying when it's expensive? It is because they believe in it. And apart from believing in it, they are willing to buy at even that expensive prices. And if people keep buying all the way from 30,000, 40,000, 50,000, and prices are 60,000, if people continue to buy at 60,000, what do you think will happen? Price will keep going higher, up to 70,000. If people still buy at 70,000, price will go to 80,000. If people are still willing to buy at 80,000, then it may rise to 100,000. So we see the demand coming into the market because people are willing to buy. But if nobody buys, then we won't see. People are they are in need of it, we know. But now they may be willing to wait at a much lower prices. So there is demand, but we are not seeing it. So what drives the prices higher is actually the willingness to buy. It is demand, yes. And that demand may be caused by scarcity, like this tomato and onions problem in Nigeria, or any other thing. But if nobody buys at that expensive prices, there won't be any transaction. And for there to be no transaction means there is no demand or there is no supply. And what causes price to go lower is because the sellers are willing to sell lower. Let me make another example of maybe iPhone. If iPhone 13 or iPhone 14 comes into the market right now, it will be very expensive, maybe even up to $2,000 a unit. But the moment another iPhone comes, maybe the next year, what will happen to this iPhone 14 that is selling for $2,000 now? The price will drop. And the more units or the more new model keeps coming into the market, that iPhone 13 or iPhone 14 will keep dropping in price. If you look at iPhone 1, that was very expensive when it first came out. How much is iPhone 1 selling for now? People are no longer willing to buy it. But if a seller has 1,000 units of iPhone 1, what do you think he will do? He will be willing to sell it at very low prices so the market can go. If he's not willing to sell at lower prices, nobody will buy it. So that is how supply affects the market and push the price lower. It's the willingness of sellers to sell. Are you clear with that? Mr. Mark? Okay, I said, are you clear with that? Okay. So the question 2. The open of the candlesticks. We know the open is the starting point, the starting price line, where the candlestick starts or where the transaction begins. That is the open. The close is where the transaction of that candlestick closes for that particular time period. Whereas the high is the highest price reached. And the low is the lowest price reached in that particular period. Now, question 3. I said I have 10,000 ADA that I want to sell, but the quantity on the next bid, as I can see, is 2,000 ADA. Let me drag one of my exchange this thing from. Let me. Can you see the screen? Can you see the screen? You can see the screen.
Yes, I don't know what I'm doing.
Oh, okay. Let me just explain then. My this as my. Oh, okay. See as this trade miss my take profits by just a little this thing. I was busy, so I couldn't look. So yeah, FTM 15 minutes. So now this is the other book. Assuming I have 10,000 FTM that I want to sell. Now let's look at the other book here. This is the other book. This is the buy side. Here I have 17,395. You can see these prices are lower than 10,000, right? So if I choose to market say 10,000, what will happen? This one will be filled. This particular one will be filled. And when it's filled, I will still have excess on hand that I want to sell. It will sell to all these bills. It will drive the price lower and sell to all of them until my 10,000 is completely filled. So that is how the market order works. Let me just exit this market, I beg. So I don't have heart attack. So are you getting it? So the market, once I click 10,000, because this other book is tiny, this is the size FTM. I have 10,000 that I want to market sell. But all this quantity on this price line, is not enough to fill my order. Then I click market sell. It will sell all to there to everyone until the quantity I'm selling is met or until my order is exhausted. So that's it about the market selling. Then the B, I have identified this point of resistance and the price is trading below it. So this is my resistance point, this red line, and I want to place my entry order at this yellow line. What type of order will I use? I think I can show this example. Yes. Let me just go back to the spot market. So now, assuming I want to buy, okay, let's say this is the point of resistance. Let's say this I is a resistance point. Are you seeing it? That line is a resistance point. I want it to break up and take my order in. I want to put my order anywhere above it. What will I do? How will I put it? I will go to the stop limit. That is what I will use to set my order above market prices. What will I do? I will say the moment this price line breaks, so I want it to be above just a bit, so 536. Then my limit order should be say 548. Then the amount of CTSI that I want to buy, let me say I want to buy 12, and I place buy CTSI. This Binance flow is very slow. See, let me. Your balance is not enough. How much balance do I have here? Okay, let me do this on futures. Balance not enough. How come? Okay, let me say 5 CTSI then. Oh. Let me do this on futures. Okay, so this is the resistance point. Let me mark this. Let's say this is the resistance point. So I want, once price comes above here, I want to place my order. Let me say I want to place my order at this point. Then I will come to the stop limit. Stop price will be 0.424200. Then my buy price will be 0.430436. The amount of FTS I want to buy. Let me say I want to buy 200 FTS. Then I'll do buy long. Can you see the order has been submitted? Can you see that? If I come to the open position now or open orders, I can actually see the order has been placed. Now, this order is here at this particular resistance point. That is the point I want to break before my order is placed here using the stop limit. If you look at the condition here, stop limit, trigger price is 0.424, which is this resistance line. What that means is when price crosses above this particular trigger price, my order will enter the order book at this point I want to place my order. Now, if we look at this, look under these open orders. Now, the symbol, we have the type, the stop limit. Side, buy. We have the price. This is my buy price. And if you look at my buy price, is 0.430436. And that is this price line here. But then then look at the trigger condition. We have mark price greater or equals to 0.424, which is this price. That means the moment market prices touches is equal to this particular point or a bit above it, I want to place this order on the order book at this point. So when price rallies above like this, it will fill my order like this. It will fill my order at this point, and then I will be in profit if it keeps going up. So that is how the stop limit works. Let me cancel this one. That is how the stop limit works. Now, where is the second? I hope you understand that. So that answer to that is stop limit. Now, question 4. I have completely filled on my spot BCC at price 40,000. I want to place a stop loss and my take profit at 50,000. What other type will I use? This is OCO. Won't cancel the order. OCO is not available on futures. That was why I use that keyword, or that keyword spot. But here we have OCO. I said I want to place a stop loss and I take profit. That means I am bought into the market. And for me to want to place a stop loss and a take profit, those actions are sell operations. So I have to come to my sell tab here. I think I have some CTSI. Well, CTSI available. Let me refresh this. I don't know why. The latency of this balance is very low. Okay. So now, let me say I want to place my stop loss at this point here. I want to place a stop loss at this point here. Then I want to place take profit at this point here. I have this coin already, so it's just like me buying into BTC, placing stop here and placing take profit here. So how will you do it? You have to use the OCO. So let's do that right now. This is the OCO. Now, this is a price, this is a stop, and this is a limit. So the price here should be my stop loss. So that is 0.365, right? 365. Then the stop for my take profit should be, or we can do it other way. I can use this one to be my take profit and this one to be my stop loss. But let's try this. Then stop should be 548. Then the limit should be, what is this price line? 567. Then the amount of CTSI I want to sell at that particular point, let me say 10, or let me say 100. Oh, it's not actually buy. Oh, it should be sell. I forgot. But then, as you can see, the order has been placed. The order has been placed. So here, my stop has been placed. Here, my take profit has been placed. It is here because this is the stop price where I've selected that if market prices should reach this place, it should place the take profit at this particular point. It should be a sell. I didn't know when that one click. Let me cancel it. And if you notice, I cancelled one and it cancelled the other one. So if one fails, that means you are no longer in that market. It will cancel the other trade. Let me go to sell now. There. OCO. Let me say this is a take profit. Wow. 565. Then let me say stop here. 382. And the stop loss should be 364. Then sell 100. Balance is not enough. How come? Oh, 100 BTC. As you can see, the order has been placed into the order book. So this will be my stop loss limit, where if market prices reaches here, it will place my stop loss at this point. So if market still gets there, I will be taken out of the market. But if market rises to this point, my take profit will be triggered and I will also be taken out of the market. And once this one is taken out, this one will be cancelled. If this one is taken out, this one will be cancelled. As you can see, both are cancelled. So that is the OCO. That is how the OCO works. And that is the answer for that 4A. Then 4B. Sesma instigated the media house to propagate a rumor. Sesma instigated the media house to propagate a rumor that his goods were going to be scarce, thereby creating artificial demand for his item, while he was able to increase prices and make extra gains. At a certain point of increase, he noticed that buyers' turnouts were becoming low. What action would the buyer take to continue high turnout sales? So he wants to entice back the buyers. What will he do in this morning? At this point, he will reduce the prices. If he doesn't reduce the prices, like somebody said, he will create a type of reward, like, okay, buy one, get one free, or buy two, get one free. And by doing that, he's actually reducing the prices strategically. But he is not coming out to say, I am reducing the prices. So what he will do is to reduce the prices, so the buyers will find the items cheap once again, and then they will come back to buy. Then here, what made buyers turn out to become so low? Buyers turn out became so low because the item prices became so high. They got so expensive. They are no longer at bargain prices where they can actually buy. That was why buyout turnouts became so low. Then this question 5. Scalper, day trader, swing trader, position trader. You know that already. Scalper buy or opens and closes the position on very low time frame. Not just very low time frame, but very short period of time. So they can take as many trades as possible. The day trader closes and opens their position all within a day. They do not sleep on a trade. Swing traders can sleep as many nights as he wants on a trade within a day, even from hours, a day, weeks, or months. Then position trader, those ones can hold the position for 5 years, even 2 to 5 years. Those are investors or long-term holders. Then the last one, price has just broken the point of resistance as in the image below. I am interested in buying but not running after the price, which means I don't want to change the price. Rather, I choose to wait for price to come back to my point of interest to fill my order and then continue the rally. What type of trading or trader am I? This is simple. Somebody said conservative trader. You are being conservative in the essence that you do not chase the price. Like, the moment price broke, if you look at this point, the moment price broke, let me actually do this, okay? The moment price broke here, if you have your order waiting at this point, that means you are a breakout trader, right? You are trading aggressively because price can do this. Price can come, trigger your order, and then come back to close inside of the resistance, retest the resistance once again, and then drops down. But you want to see price close above of the resistance and then turn this resistance line to support. So you are being conservative with the way you trade. You don't want to see price running and just FOMO into it, that price is going up, it will continue going up. But you want to wait for it to retest that level it has broken and find support. That means you are a retracement trader, or like somebody said, a conservative trader. So that is all the answer. Are you clear now? So that is it all. So now people that are actually won, they should send me their USDT wallet, TRC20. I think that one is free. That one doesn't take any fees. So they should send me, I will mention it in the group now as well. So they should send me their USDT wallet, TRC20. Then I can disperse the funds to them. So that is it all. Thank you all for participating, and congrats to all the winner. Welcome. So hopefully very soon we will announce whenever we will do another one, as God blesses us. So let's drink palm wine on top of this one first. All right, guys. So thank you for coming. Yeah, good night. Bye bye.